Okay, shoot.
All right. My bad. Get up last second. All right, everybody. Welcome back. I believe this is week either 18 or 19. I have to go back and double check. Forgot to put it on this first slide. But anyways, we are back with another live lesson. And this week, we're going over the role of technology, right? So kind of just a fancy way to say, you know, the indicators that I use and kind of some parts of the indicators that I don't personally use, or some that I, use a form of, but I don't use other forms, just to go over more than just what I prefer to use, okay? So, getting right into it, a very, very simple one that I'm sure plenty of you guys have on your charts, and that is the exponential moving averages, or the EMAs, right? And then right below it, I've got the 9, 20, 50, 100, 200, and in that picture, I have all of those EMAs just put up there for example, just so we can kind of go over the differences real quick. So, to start, let's look at that chart that I have there in the right corner. Right, so the one all the way up at the top, right, the one that's holding closest to those candles, that's going to be the 9 EMA, right? Again, I assume most everybody understands how EMAs work, but if you don't, the farther away it is from price, all the way down there at the bottom, that would be the 200 EMA. You go to the one in the middle, that's the 50 EMA. But the reason that it gets farther away or closer to price, because as you can see in this chart, once price kind of breaks that made support area and we start to come back down, it interacts with those lines again. So it's not like the price just avoids these lines. It's an example of the average price of the last X amount of candles. So for example, the 9 EMA, right? It is the average price for the last 9 candles. So if it's only 9 candles, we can assume it's going to stay pretty close to price. The only time that it would really move far away from price is when you have a couple candles, 1, 2, maybe 3 candles, that have a huge surge or drop in price. That way the average doesn't spike with it, right? It's still the average, so those previous candles are going to hold whatever their value was, but now it's going to follow this one candle and it won't catch up to it until the next few candles kind of slow down, right? So it kind of consolidates a little, as you can see in this example, right in the middle, right after we made that peak. Maybe, I think you guys can see my mouse on there. If not, it's not a problem, but comes all the way up and we hit that first peak, right? We got that big wick up top, comes down into this little valley. That's where you get the 9, the 20, and the 50 kind of start to jumble together, and they almost cross at one point right here. Right? This is because the average price has come in and consolidated. So we know that when it comes down to these areas, it's going to reject, or at least it should. And we can see that very well on this green candle that I'm kind of highlighting here. Comes down into the 50 EMA and rejects harshly. Comes back down again and rejects once again. As we move forward and it hits that big drop in price, that's where we interact with the 200 EMA, right? So remember, it's an average of the last, it's the average of the last 200 candles on this chart. So way back here, before we can actually see what this image shows, we can see that it had a surge in price, and that's why it got so far away, because the average is still down here and it slowly reaches up. So again, overview of what the EMAs are. Again, I'm sure many of you know, but let's go into kind of the use case for these. So low time frame charts, you can use the high EMAs, high number EMAs, or the low number EMAs. It is totally up to you. But personally, if you're looking for like an indicator of short-term trend, I prefer to use a lower EMA, because we know those low time frame charts are the makeup of big candles on the high time frame charts. Okay, so think about any of those pullback moves you see on the low time frame, right? That's just one candle on maybe the hour chart if we're trading the 5-minute, right? So if we get a huge push in one direction on the 1 hour, that can have a lot of pullbacks on the 5-minute or the 1-minute, or even, lower if we're on the second chart, right? So if we use a high exponential moving average, we're not really going to get a good indicator of what the low time frame trend is. We want to have a lower EMA so that it's following that line tighter, kind of like you can see right here in the rise that we get as it follows the 9 and the 20. Now, higher time frame charts, you can use those really high EMAs like the 100 or the 200 or even the 50 in some scenarios. That way, when you know that the high time frame comes back into those areas and it starts to reject, there's a really, really strong accuracy to that actually rejecting and going higher or rejecting and going lower. So just utilizing to what makes sense. If it requires more candles to give you an average on the EMA, then it's going to be more accurate. So you want to use a higher time frame. Lower, use lower. Again, you can interchange these how you'd like, depending on your strategy, but that's kind of like a pretty good starting ground. Now, moving on to the next one. This one is a specific indicator. It's called TR_main, right? That's the name of the indicator. You can look it up. If you want me to send it to you directly, you can DM me. But I've used this for years. I want to say close to 2.5 years now, because it pinpoint drops all these different levels that I can use in my charts every day, including pivot points, M levels, S levels, R levels, support and resistance levels. It'll show the high and the low of the day. It'll show yesterday's, the weekly, and it has a lot more to involve. But for today, I'm just showing those main levels because that's all I have on my charts. And there's a few others that I don't use, but they're important if you would like to. And the reason this is so crucial is because this takes away the need for you to go back and place your own levels. And of course, the first question you're probably going to have is, well, wouldn't it be more accurate? Wouldn't it be more accurate if I place my own levels? In theory, yes. Yes, it would. But I can tell you from personal experience, the problem I've had with this is when I go back and say I backtest and I place my own levels, and then I, even if I'm not like, oh, well, I'm going to move this one a little bit here because this makes more sense, using hindsight, right? Even if I avoid that, when it comes to placing those levels in the live market and you have to then respect those levels in your trading, it can be very difficult because you're going to want to be more subjective. You're going to want to say, oh, well, I placed this level before the market opened, but now that I can see what price action is doing, I kind of want to avoid this trade because I think my level should be a little closer, right? So that's just an example of something that I have run into. But with an indicator like this, you don't have to worry about that. You can just be able to use those levels, right? See where they are placed and then respect them. It's not you placing them, it's placed on there by the charts. And the other great thing is these levels are high time frame levels, right? So the levels you see right there, that's on the 5-minute chart, right? But they're not 5-minute levels. They are on the, it's either the 1 hour or the 4 hour, I forget, but they're not low time frame levels. It's meant to be used on the low time frames, but marked out on the high time frames, okay? So I'm going to leave that one there. It's pretty simple, just support and resistance levels, basically, that you don't have to worry about placing. And then the last one I'm going to go over is the SMC by Lux Algo, Smart Money Concepts. So I'm sure everybody is fully aware of Smart Money Concepts. There's a lot in it that I am not aware of. I try to keep it fairly simple, and that's why I only have these listed. There is more in this indicator, but I just don't utilize them, so I wouldn't recommend anybody to utilize something that I personally don't, or at least I wouldn't teach something that I personally don't use. But these right here, it's a little bit newer for me to actually involve in my charts, even if I've had an understanding of them. But the change of character and the break of structure, that's what we have there first. And you can kind of see on that chart, you can see the dotted lines for the change of characters and the dotted lines for the break of structure. All that means is the trend on this time frame. So it's not a larger time frame, it's whatever time frame you're looking at. The trend has changed. And you can see that indicated by if it is a red, so a red group of candles. Anything that's red, that means the change of character was to be short. The trend is in a downward direction. Anything that is green, it is in a upward direction. Now, I chose this one specifically because look right here. You can see it changes to be green all the way here on this left side, but it really doesn't go up at all. Not at all. You actually have this strong red candle. That's what changed the character. And it kind of consolidates. And then it changes character again. Consolidates, it does fall, but it really just kind of stays in that same area. And then even better example right here, we change character and it immediately drops. So you have to ask yourself, well, if this is accurate and it's saying that price has changed the trend, right? Why is it dropping? Because even if the rules are met for trend to change, which what are the rules? Whatever the previous high is, right? Let's say we want to change character to longs. Whatever the previous high is, that must be closed above. And then that is going to be a direction that we're moving upwards now. So in this example here, where it changes to be a long from the short area, this previous high right here is broken by this red candle, and it closed above, and that gives us markers that we should be going up, but it's not 100%. It comes back down, changes character once again, pushes back up. The reason I give that example is because we still have to involve other confluences. We can't rely on just one the entire time, right? So next we have the order blocks and fair value gaps, right? This ties into what I'm just talking about. Use multiple confluences. So in this example, there's not an order block right above us, but I also don't have my other indicators turned on, but we can kind of see, like, here's one high right here. Here's another high, doesn't quite reach it, but it still pushes up and it rejects very harshly, right? And then this one comes up, not really a harsh rejection, just kind of comes up, rejects back to the bottom. But we know before this break of structure, there was a level that was being respected. And that level was broken by this strong green candle right here after the change of character. And we can utilize this to know, okay, it required a lot of energy to break through this level. So moving forward, this should be represented as a strong support level now. It's broken the resistance, comes back down, can be utilized as support. This is actually today's chart, but in my TR main, right? This chart right here is not today, but actually it might be. In this one, you can see right here, this pivot point is the exact point right here where that break of structure occurred. So one more time, you can see here, pivot point was right here. After it broke with that strong candle, it created that pivot point for us to respect. And it respected once, came down a little bit, but then pushed back above. But another example of how we can utilize other indicators in our strategies and to make sure that we're not going into it blind, expecting every change of character to go in whatever direction it was supposed to go, right? Or whatever break of structure happens that it's supposed to be a continuation. Because right here, down at the bottom, it comes up, comes back down, breaks structure, but then it immediately rejects back into this consolidating area, right? And that's where order blocks and fair value gaps can come into hand. The fair value gap you can see is this little green block right here, represented on this huge candle that doesn't come back to fill. I'm not going to go into exactly what a fair value gap is. There are plenty of videos online, but a short little synopsis would be anytime you have a strong candle and there's an area in between that candle's body where the wicks of the previous and the following candles do not fill, that creates a fair value gap. That area where it doesn't fill, that has a traction, and price most likely wants to come down to fill that area. Order block, very similar to support and resistance. It's just a larger area. Just think of it as a point of rejection and attraction. And then finally, I have equal highs and equal lows. Very simple. It's just times where the price comes back up, meets each other. Think of like a double top or a double bottom. Very, very similar in that retrospect. Anytime price could have come down and broken structure, but it didn't, and it rejects, equal low or equal high. Okay, simple like that. I'm going to pause there. Reality, do we have anything, any questions or anything?
Anybody got any questions, guys?
I know I went through that fairly quickly. Just want to kind of go over everything and make sure everybody, can stay around for as long as they can.
So far, I'm not seeing anything. We got 6 viewers on Rumble, 5 on YouTube. Crown's giving thumbs up. 1 on Twitch.
Good to go.
None on Kick.
All right. Well, not a problem. That's all I have for today. I mean, I feel like I went through. Let me make sure. Yeah, I've got nothing else. But yeah. So again, these are just some examples of indicators that I personally like to use. They kind of fill in all the gaps of my trading, whether it be, we'll start here. The EMAs, I use them for short-term trend indication. The TR main, just use it for the levels so that I know, hey, this is a point of contention or a point of rejection, right? Also know where price is going to be attracted towards. And then finally, the SMC by Lux Algo. It really hones in that idea of following the trend with the change of characters and the break of structure. Because the EMAs are great. They're a great point to indicate where it's going and a great point to indicate what it's going to reject off of, right? However, it's fluid. So any sort of strong push in volume, back over here just to show, like right here, this red candle you can see, pushes down and it comes right underneath that 9 EMA. That's not a break of structure nor a change of character, but it broke below that level and rejected. So that's a point where it's kind of nice to have something like this, where I know for certain that it's much more likely this is a change in trend, not just a fade away to go below the EMA for a quick second and then pop right back, especially since the 9 EMA is a smaller EMA than the others. But again, I'm going to leave it there for everybody. Thank you all that are watching and joining us. Be sure to come next week, and if you can join in the Discord, I like to see more people in the actual Discord voice channel so I know who I'm all talking to, and I feel like it prompts more discussion. I can actually talk with you guys one-on-one through the chat box in the voice channel. So, Reality, thank you again for hosting, and we'll be back next Thursday.
Yeah, beautiful. Thank you, Landon. I appreciate you as always. Very good job.
Thank you, sir. All right, I'll see you guys around.
All right, guys. Have a great rest of your afternoon. I'll see you all first thing tomorrow morning, guys. And as always, stay consistent out there.
Yeah, thank you for watching.
Yeah, you can hold on, Crown. Let me turn it down. You can't talk. What are you in the education channel? You can't talk. Hold on a second, guys. Bills, you can't talk in this channel. It's fine now, but make sure that whenever you come in, you mute if Landon's having a session. All right. But Crown, yes, you can. I'll switch over to voice as soon as I end this stream, and we can talk about NQ real quick. I'll go to trade and chat and see you over there. All right, Crown?